We've lifted a team from a big four consulting company to be the basis of the team that we have here. Within that space, I think it adds quite a bit of financial and business acumen around a topic where there is an awful lot of hype, and within a new economy and a new product and a new technology. I think what's very clear is that the belief now that blockchain and cryptocurrencies in general have moved out of the hype cycle and what we're now seeing is that people are realizing in which way that blockchain can be applied to business cases that have a fundamental economic benefit. We're seeing those being turned over, and because we're an infrastructure firm, what we do is we give advisory in helping clients to realize their potential, and most of that work is a break even for us, because what we do is we get paid when things get turned on, right? We have infrastructure, we deliver infrastructure. When the infrastructure is put into place and it's working, that's when we start having, our business model works from that point onward. So a lot of what we do in the advisory space is help customers learn how to deal with the new technology, identify spaces within their organizations to use that technology, identify how to get the sponsorship and position that with the board and as a strategic component of what they want to achieve. And most of that advisory, although it's not free, it's not our intention to sell at a massive profit, right? So that gives customers a relatively safe entry path into treacherous waters. It's safe because they can choose, what components. They know that we're not in there to sell them more advisory, and there's kind of a shared risk, shared reward model in that if it doesn't work and we don't make it to fruition and the model doesn't actually turn into an applied blockchain instance, then in that case, there's also not going to be any reward from our side. So with that as a backdrop, what we're finding is that there's a massive hunger in the market. Blockchain didn't go away; it became more. The disruption that people think it's going to do didn't go away as well and turn less. It's not like cloud and AI and machine learning, which kind of had their hype and fizzled out. Blockchain continues to be looked at as the number one disruptive force in technology and turning business models in every single industry sector on its head. And therefore, the hunger has now saturated the management, the executive level, and the operational levels, and people are craving for more information, and they want to have things. So we started setting up a training course, right? We're getting these accredited by EPFL, Universität Basel, Handelsschule St. Gallen to count towards credit towards PhD and master's degree, but not just in Switzerland, but also internationally with Donau-Universität Krems and international schools in Frankfurt, the university level. And that lets people go from the business side of a blockchain experience right down to the technical core and how to program. What's also true is that Switzerland is a country that is trusted in financial services, and within Switzerland, our brand in particular is trusted as an infrastructure provider. And then the combination of those two elements has created a backdrop where companies who are running blockchain applications, especially ones that are based on a proof of stake or a proof of reputation algorithm for consensus, they turn to our company in order to host some of their consensus nodes. So we are hosting nodes as validator nodes, the ones that write the transactions into the next block of a blockchain, internationally for some of the biggest blockchains in the world, right? And that in addition with our trust brand, has attracted a group of engineers that I couldn't have dreamed of putting together at the Big Four. They would have walked away from a Big Four. Their whole mentality ticks differently, and it's more and more my job is not blockchain management or blockchain implementations. It's talent management, because the resources are the basis for which you can do, especially in something that's moving as fast as this. Now with those resources, and we have people that I couldn't even. There's people working for our ranks that I couldn't afford because they're Bitcoin rich and they're millionaires, and I can't pay them what they would get working in other places. And they still stay here until 11 o'clock at night and work through problems, because we have some of the most interesting problems that we have, right? The challenges that we are working on are global international firms that are shining light into the dark corners of blockchain. It's a new technology. There's a lot of things where there's still work to be done. Transaction volumes per second is an obvious one, especially for financial services, right? And compliance and FINMA regulations and identity and privacy and confidentiality. All of those are topics that people, how do we defend against dark money continuously? All of those are topics that are continuously extremely important, where there's not all the answers yet. And there's certainly not consensus that that's the way to solve it. So the use cases that we work on have a very solid business case. Some of those business cases are in the millions of dollars a day that the solution is aiming to get. And with those use cases, there's the appetite, the tenacity to purchase the right skills, to shine the light in the right dark corners, and to really flush through the application. And I think that makes us unique, because in a market where there's a lot of meetups and there's a lot of events and there's a lot of white paper, there's also very little follow through. And one of the things that we pride ourselves on is we bring it all the way to live. We don't talk, we do. And that's kind of the basis of the way that we've approached the scenes, and then the way that we're trying to push the company forward. So in addition to training, we also have a host of services that should be very interesting to any bank, that starts. And it begins really with the training. It begins with getting up the learning curve. It begins with making sure that the strategy of a bank isn't, there's this thing called cryptocurrency out there. We don't want to do anything with it, so let's just ignore it and hope it goes away. And then all of a sudden you realize you've got 400 relationship managers, and depending on who you ask, you get 400 different answers to how can I get involved in the capital appreciation that we see in Bitcoin. How do I want to put my money in? And if you get 400 different answers, that's not a strategy, that's default. That's what happens if you don't do anything, right? So we try to say, look, the first step is create a core team, train them, make sure they understand the concept, the market, where it's going, what the others are doing. And then from that basis, have them draft a simple white paper, one pager that they can pass around saying our strategy is to do this. And even if that strategy is to say it's not to do anything, because for our brand in this market at this point of time, that's not important, then at least that's a strategy, as opposed to it happened to us by accident because we weren't watching, right? And that's what we are trying to tell the Swiss banks to avoid at all costs, right? Switzerland is seen as a banking center in the world globally, and these are very important things that the banks in Switzerland need to realize, that this is an opportunity as well as a risk, and there's an opportunity cost of doing nothing. And the opportunity cost is, especially in blockchain and crypto, other people will do it first, right? So let's say now that you're in the second stage, and the strategy that the bank has decided wasn't to do nothing, it was to proceed with caution in defining a position for the bank's brand in the market of blockchain and crypto and digital asset custody. Okay, so the first question comes around is compliance. Right? And in that space, I think, again, our brand has a reputation. We provide compliance services for 180 different banks, with identity provisioning, with know your customer, with anti-money laundering, with customer onboarding, which is a fundamental part of what we do, right? So we're actually one of the only independent accredited by KPMG companies that provide digital identity services, in this space that FINMA recognizes. And so, that, and we've adapted those services to be pointed at crypto. And we're working with a number of banks in Liechtenstein and Switzerland to then say, okay, so what does compliance look like from a normal customer, which we already understand, walking into one of our big banks, we're saying, here's my money, I'd like to open an account. And what's the difference between that and a non-normal customer walking into a bank saying, I've got Bitcoin and Ethereum that I've made from an ICO and I'd like to open an account? And what do we have to do in addition to the normal checks that we do in order to make the bank feel comfortable, the board of the bank feel comfortable, and FINMA to feel comfortable in that triangle to work? And we've had those conversations with the banks. we've had that conversation with FINMA, and the feedback we're getting is literally, you guys are setting the standard for what good looks like in Switzerland when it comes to token generation services, right? So compliance is something that we do a lot of. And then there's the token generation itself, right? So we run between 4 and 6 token generating events every single month. We issue ERC20, the NEP5 NEO token. We issue Stellar Lumens tokens. We do asset, utility, and payment tokens. We have all three currently at different stages of development for a whole host of different customers. It's all white labeled, you don't see it, and people come to us not because these open sources, code is so complicated. People come to us because we have the compliance, the KYC, the AML, and the bank connection at the end, right? So token generation services is a big part of what we do. Ultimately, however, what we're really interested in is to run blockchains for people. So there isn't a better place for us to be than if we could provide services to customers who say, look, we've just developed a sensor that can monitor the temperature on containers worldwide, always, continually, and can prove that, the temperature in the container never went above a certain mark. That's our job. I should be talking to shipping companies and container manufacturers and sensor tech. That should be my market. I don't want to bootstrap a blockchain node. I don't want to run a blockchain node. I want it to be done for me. Can't you run that for me, please? And then we say, yes, we can. Actually, we could do it quite well, and we could do it at a per transaction fee basis, right? So that's where we really want to get at it, because then we can use our infrastructure, which is our core strength, right? With the Swiss data centers, tier 4 data centers in Switzerland, manned by Swiss people with no outsourcing, and that privacy that we can get globally. No Brexit, no UK, no US, no China, no Russia, no nothing, just Switzerland. That has a value, right? And now within that space, what we've also noticed is that people, and especially the banks, are getting much more interested in storing digital assets themselves, right? So I need to have some stuff. I need to have the ability to provide my ultra high net worth customers, my high net worth customers, with the ability to buy Bitcoins and to buy other digital assets, artworks and cars and whatever else comes on, gold coins, oil barrels, all of it are now represented by crypto keys. And how do I deal with those? So it's different type of storage that you need to deal with regular currencies or online banking. It's a completely different type of infrastructure. You have a crypto wallet, and there's these funny things called private keys, and if you lose the private key, then the right to the asset is gone, right? And so you need very specialized equipment to be able to trade. Now the good news is that we can build and lease that equipment, in a price per month, which makes it extremely attractive if you compare it to traditional banking infrastructure. So what we're talking about here is digital on-site custody. Right, a vault, right? Vault services built in the basement of a bank, actually spread across multiple locations, right, of banks, because there's a bit of redundancy. And if the fire breaks out, like what happened in Zurich, and the vault is gone, then so are the crypto keys. So you need to make sure that there's several different locations in several different cities mirroring, that information, because that's a very important, part of dealing safely with this money. And what we're seeing now, especially, it's summer of 2018 now, and we're seeing an acceleration in the demand for these type of solutions in the market, where in January we pretty much couldn't give them away. We're seeing every other day now a bank, a crypto asset bank or something, has come to us with a specific ask. We also see that right now, there's I think 5 or 6 new banking license applications at FINMA. I don't know when the last year was where we had that many banking license applications. We know of about 3 more that we're working with to get presented. So let's imagine 2018 ends with 10 banking licenses at FINMA for crypto banks. Well, that's a new market. Right? And it's again one of those things that you have to say, okay, how are we as a traditional bank are going to work with these companies? Are we going to ignore them? Are we going to befriend them? Are we going to define them as the enemy and go to war? Whatever it is, again, is something that needs to be part of any strategy looking at 2020 and beyond. The discussion around build versus buy when it comes to getting a banking license. The challenge is very much knowing what you're buying. And the hesitation has been that if you buy a bank and retool it to be a crypto bank, you don't actually know, how many zombies are in the basement that will come out and surprise you and make your life difficult, right? Because you buy the bank on the basis of a certain amount of disclosure. When you then go through, after the sale, the transaction is complete, and it turns out that some things are not as clean as you have to then also disclose those. And then you might find yourself actually cleaning up messes that you had no intention of doing, and it ends up costing you significantly more money than buying a new one, right? And every bank, because of FATCA, because of the changes in the global regulation with MiFID and tax transparency and a bunch of other reasons, has inevitably a series of reporting, a history that may or may not be as clean as they want it to be. And that's what we see the challenge now. So the alternative is to build a new bank, and that is very much also because of the crypto and because of the sensitivity of and risk associated with the topic. Also because of the potential, I think I can say that FINMA's preferred route is that if somebody's serious about creating a crypto bank, they begin. Every time, they begin with a new banking license and put the money, capital, and effort into getting that banking license and start from a clean slate, because it is a topic that at the moment, how to do the monitoring and how to work it out is not completely clear. A crypto bank will need certain type of infrastructure, right? It will need the ability to work with clients, right? It needs an account management function. It also needs the ability to store crypto asset. So it needs a vault technology. It needs a wallet technology in order to do things. And then it needs the ability to send transactions to different blockchains. So it needs to be able to work with at least the top 10, 20, 30 cryptocurrencies and send transactions to those items. And it needs to be able to take fiat currency, so Swiss francs, euros, GBP on one side, and convert those into digital assets. It probably needs the ability to issue digital assets. So if it says, okay, we have $100 million in gold in the basement, we are going to issue a gold token worth $100 million, and then it needs to be able to mint and manufacture crypto assets, right? So it also needs to have a couple of blockchains that it knows and runs and trusts very well. That standard, those are standards that are defined. So the ERC20 Ethereum token is what most people are using. It comes with a My Wallet, a My Ether wallet, which most people have found themselves comfortable with. However, then you're talking the business to consumer space. If you're talking to the corporate banking or family private office or wealth management or asset management or even hedge fund, then you might be looking at a different scope of services, right? The bank may choose to invest in ICOs, right? These are tokens and are sort of the altcoin type category. Yet, if I have $100 million hedge fund that's investing in these type of tokens, I still need the professional infrastructure to store, these assets, right? And so you're right back in the banking infrastructure space. And those are that's the suite of products. And then you need to integrate into the exchanges, and in order to be able to trade your currencies, right? You need traders' dashboards in order to be able to market make, so if one customer wants to sell Bitcoin, the other one wants to sell Ethereum, then you can bring these two together and make money on the trade without going to the markets. And so all that infrastructure is almost entirely new, right? It all is different from your traditional banking infrastructure. You also then need the ability to send money international, so you have the international remittance use cases and so forth, which are also, where new technologies replacing old technologies, such as Ripple replacing Swift, which is also one of the companies that we work with quite closely, right, in order to help banks, get away from the Swift type of transactions and move to the Ripple type of transactions. And then again, how do you make sure that you don't have dark money appearing in your systems, right? How do you make sure that your compliance and your know your customer and customer onboarding and anti-money laundering are strong enough to deal with a very fast-moving pace, right? We're seeing lending is now the new way to wash money. We're seeing it as a very effective way to wash money because I take bitcoins that have come from dark sources. I go to less than reputational bank. I get a loan on 50% loan to value against the Bitcoin price. And I have a loan from a bank that's white money again, but it's bound by dark money. And so we're seeing the evolution of the people's ability to work in crypto is faster than compliance is certainly the regulator's ability to keep up. So there's an aspect of crypto banks needing to self-regulate, and that requires expertise, which is again people driven, and that's a very tight market, but also then also a completely new set of thinking and a new framework with which to deal, right? So those that are buying a banking license, they have to then look through the basement of the existing bank, shut down all the business that it has, and then kind of create the new business on top of that, and maybe there's some terra bruciata in there that they don't, didn't know about or have to deal with. On the other side, if they begin with a completely new license, then they can build this infrastructure as cleanly as possible. They can have full and transparent disclosure to the regulators. And then from that basis, they can say, look, we didn't know everything at the time. And to be honest, the laws that the regulators, FINMA is just a regulator, but they don't make the laws. And the laws come from Bern, and it takes a while for them to get to the regulators, right? And so even FINMA says, look, we can enforce the laws that are in place now. But we can't really talk about, the laws of what we think should happen because we don't know, and we're not the people that make those things. So we can only give guidelines, right? And with those guidelines, you guys have to test forward. But there was a legal entity set of laws before there was an audit firm set of laws, and that's the way the market works. There will be crypto banks before every law around crypto securitization is finalized, and hopefully we will continue to work with an open dialogue with our regulators so that the people who are helping progress the situation aren't penalized for being first movers, right? And that's certainly the FINMA that we know at the moment, and we hope that continues. Absolutely, right? I mean, so let's say 10 million is the price, right? What do you need? Well, there's a set of legal documents that you need, right? And we work with, we don't do law firm stuff, right? So but there are some law firms that we work with very closely who have their ex-SMB, their ex-FINMA, they know what it takes, right? Normally, we would say, well, look, what's your track record? Do you recognize how hard the journey is about what you're undertaking? And some of the customers say, I've applied for 15 different banking licenses in my career. I've got 13 of those 15. I've been chief executive officer of a bank for the last 18 years. We've got $250 million in start capital. We're pursuing licenses in 7 jurisdictions, and we're going to be one of the biggest crypto banks in the world. And that's our status today. So we say, look, I mean, far be it from us to stand in the way, but it's important just to check to make sure that people understand how hard this undertaking is, right? This is not something that it'll take a year, right? And there's going to be some questions that come against it. What the regulator will look for when they issue any banking license is, do they have the technical wherewithal to manage a bank? Do they have the skills in the people to manage a bank the way we'd want to see one to get managed? And do they have the capital to continue the bank with its founding principles, right? And so where we come in is very much in we can't build the team of technical stuff, but we can certainly build the infrastructure to run the bank, right? If it's a crypto bank. 100% end-to-end guaranteed, right? And we've even gotten so far that our services are insured by a major household name in Zurich, right? So even should the case be that we build infrastructure for the bank that for some reason there's a software error, the insurance covers the loss, right? Which in crypto is extremely rare, right? So so there's the legal part, there's the technical build part, show us that you have the infrastructure up and running with the servers and everything else, and then there's the human resource part, it's like, show me you have the people that you need to run the bank. 12 to 18 months for the banking license, right? Depending on right now. I mean, I don't think that, I keep imagining there's one poor guy who's had a, a very clean desk for a long time. And that all of a sudden, he's very close to having a heart attack because he has now so many banking licenses to process, right? So surely the demand in having Switzerland as a seat for a global bank that deals with cryptocurrency has gone up. That's certainly going to slow down the process, right? But the companies that we're dealing with at the moment that are pursuing that license are looking to be in operations in January 2020, right? So that's a 2-year window. Now that's probably conservative.